Good afternoon. My name is Aaron Jacobson Swanson, and I'm the president of CFA Society Atlanta. I would like to welcome you all to our online series, Black History Month Highlight. I'd also like to extend a special thanks to our sponsors, Voya Investment Management and T. Rowe Price. We are excited to be hosting a panel discussion this afternoon showcasing a distinguished lineup of finance professionals from the African American community to coincide with Black History Month. The webinar will span a broad agenda, from a discussion about careers to advice for future finance professionals. The panel will provide recommendations for the broader finance community seeking to enhance diversity and inclusion programs, while also sharing market opinions and insights from our panelists' area of expertise. We also hope you'll join us for our 3 upcoming virtual events. On March 3rd, we have an SEC update. On March 11th, we have Dynamic and Disciplined Investing, Can We Do Both? And finally, on March 21st, we have Financial Modeling Best Practices, 10 Tips to Build a World-Class Model. With that, it is now my pleasure to introduce today's moderator, Jennifer Weems. Jennifer is a portfolio specialist at Voya Investment Management, where she works closely with fixed income portfolio managers, communicating portfolio process, strategy, holdings, and performance as a representative for the investment team. Without further delay, I give you Jennifer Weems.
Thank you, Aaron. And thank you all for joining today. It's a pleasure to be able to moderate the first CFA Society Atlanta Black History event. So let's introduce our panelists. First, we have Sabrina Bowens, Richards, CFA, Director of Portfolio and Market Strategy at SunTrust Advisory Services, now Truist. Sabrina is responsible for providing strategic and tactical asset allocation and capital market research, supporting the firm's investment strategies, creating custom constructed portfolio solutions, and preparing related topical market and strategy communications. Next, we have Nick Carroll, CFA. Nick is a senior investment consultant and portfolio manager for Synovus Trust Company. Nick is responsible for providing investment consulting and investment management services to the firm's institutional clients. We also have Nathan Lewis. Nathan is the majority shareholder and president and CEO of Security Capital Brokerage. He is responsible for leading the company's investment banking and institutional sales activities to a range of institutional, municipal, and corporate clients. And for our 4th panelist, we have Dakia Scott, CFA. Dakia is the CIO, Chief Investment Officer at Southern Company, where she leads its trust finance team, overseeing the company's corporate pension plan and investment options of the company's 401k plan. So now that we have our panelists here, we can begin with the panelists walking us through their career backgrounds, where they started and how they've gotten to director, portfolio manager, CEO, and CIO, and maybe even some challenges they've had along the way. So first, I'll start with Sabrina.
Sure. Thank you, Jennifer, and thank you, CFA Society of Atlanta, for hosting this inaugural event. I would say the first challenge for me is, I grew up as a kid in the inner city in Brooklyn, New York, and I didn't know anyone in this business. In fact, money was kind of a taboo topic to talk about, and, it wasn't something we discussed around the dinner table. My mom actually worked in television, and I knew that I had a fascination with predicting outcomes. I actually thought I would be a meteorologist. So I came to Clark Atlanta University in Atlanta to study TV film production, and that dream was pretty short-lived. I realized that I needed something more stable, and so I switched my major to business with a focus on finance. I was very fortunate to have a pretty diverse group of supportive professors who seemed to really have an interest in my professional growth. And in fact, I'm still in touch with many of those professors after 30 years. And that was where I first learned about the CFA designation. I worked really hard. I maintained good grades. I even spent a semester in Europe studying international business. And after graduating, I had quite a few job offers available to me. I was one of 2 people to be accepted into a management rotational program at Smith Barney in New York City, conducting research for international companies. And on my first day, I will never forget this, but someone greeted me and asked if I was the new administrative assistant. There weren't many women nor people of color in non-clerical positions. So, it seemed like, that was, what I was there for. And throughout my stint at Smith Barney, I would say a lot of times I found myself isolated in meetings because I was meeting with a lot of executives from international companies. And I would typically ask a question in a meeting and they would respond to my Caucasian male boss at the time. So despite some of the challenges that I did face at Smith Barney in New York, I did a bit of networking and I made sure that I connected myself with leaders across the organization. I was introduced one day to the now late Lamond Godwin, who I think would change my career from that day forward. Lamond managed a small investment subsidiary of Smith Barney in Atlanta. And what I did not realize at the time was that the organization, excuse me. What I did not realize at the time was that the organization was full of diverse talent, these very young emerging professionals with MBAs, CFA charters, CPA designations. And these young people fresh out of college were actually involved in making investment decisions. The 80s and 90s were a pretty interesting time in the Black investment community. We were in a bull market, and then you also had the influence of politicians like Maynard Jackson, Jesse Jackson, and Lamond Godwin was also well connected. And they were really charged with investing in a lot of Black businesses at the time. So you saw, you know, a new creed of asset management firms, investment banks, brokerage firms, et cetera. And, you know, I feel like the company really thrived in the number of years that we were open. We grew to over, I don't remember exactly what it was. It might've been $3 billion in assets under management. And we were very successful, but the 2001 recession did force our doors to close. So I used that time to do some introspection and to kind of finish the CFA program. I did spend some time doing research and business development for another Black-owned investment firm here in Atlanta called Decatur Capital Management, and spent some time there before joining SunTrust in 2005. So that's kind of the career trajectory. I would say now, you know, you talk about getting to director level. I mean, it's definitely been a journey at SunTrust. I'm continuing to grow. Now with the merger of BB&T and SunTrust, you know, my group is serving over 1,000 advisors, offering strategy guidance, and the work is really rewarding. So I'm excited about where I came and where I am now.
Oh, wow, perfect. Thanks, thanks, Sabrina. And let's, and Nick, believe Nick would be next.
Sure. So I did not start out in this industry either. I graduated from the University of South Carolina with a degree in statistics and computer science. So I started out as a programmer here in Atlanta. I was recruited by a firm called MSA, Management Science America. They're no longer in business. They got acquired years ago, but I was a COBOL programmer, so I kind of date myself back then. But I'd always had an interest in the financial markets ever since I took my first economics course back in undergraduate school. And so I'll never forget, there was a day that we had a program problem with one of the systems, and somebody handed me a stack of green bar code with nothing but zeros and ones on it. And they told me that I had to fix the problem in 2 weeks. And that was that very day I decided I was going back to graduate school and pursue a career in something related to finance. And so the way I got into this business is kind of interesting. I had a gentleman who was at the time the head of the DC Retirement Board, came to our graduate institution and taught a course on pension fund investment. And he sort of sparked my interest. His name was Adrian Anderson. And as a result of Adrian Anderson's early influence, I began to delve into this business. My first job out of graduate school was in a rotational program also that was sponsored by GTE, which is now Verizon. And one of my assignments was with the pension fund back then. And, you know, back then, I think the GTE pension plan was about 64 billion in assets. And so you can imagine they were widely diversified, had their own in-house trading desk. And unbeknownst to me back then, I was assigned to the venture capital product. So I was dealing in alternative investments way back when. But my time there expired. and I got rotated back to Atlanta, but I had made my decision that investment management was where I was going to spend the rest of my career. I was fortunate enough to connect with a large cap value firm, minority owned here in Atlanta. Worked there from 90 to 94, did a number of things. As Sabrina sort of shared, you know, when you're at smaller firms, you get to have your hands in a lot of different pies. So I was an investment analyst. I was a portfolio manager. I built out the trading desk and was the head trader there. So did a lot at that firm, ran into some challenges, subsequently found myself working with SunTrust as personal investment counselor, managing money for wealthy families and high net worth individuals. I longed to get back on the institutional side, so I was fortunate enough to find my way onto the pension fund at Georgia Pacific, where I worked with a team. There was 3 of us, and we managed about $8 billion in assets, roughly split 50-50 between DC and DB. Georgia Pacific got acquired by Koch Industries. And so the 4 of us transitioned to other career paths. Later found my way to Aon Investment Consulting. So I worked as an investment consultant for a few years, doing research in the alternative space and consulting to some of their DBDC clients. And again, wanting to get back into a more investment decision-making type of job, was able to land a job with Synovus Trust Company, where here I am a lead, senior investment consultant, portfolio manager. I manage just under $1 billion in assets across endowment funds, defined benefit plans, profit sharing plans, and I oversee not only the bank's 401k plan, numerous 401k plans for the bank's institutional client base.
Perfect, thank you so much. And then Kia, already unmuted. Perfect opportunity.
Jennifer.
Yeah.
Sure, so I'm Takia Scott. I serve as Chief Investment Officer at Southern Company. I started in this business back in 1995. I had gone to Spelman College, majored in economics, and in my senior year, our president at the time, Dr. Janetta Cole, had put together what was called the Spelman Emory Partnership Program, which was an opportunity for seniors to go straight to business school with a corporate sponsor. 3 students were chosen. The sponsors were Koch, Wachovia, and UPS, I believe. I was selected as one of those 3 students and was partnered with Wachovia. Figured out I didn't want to do banking right away. But through the MBA program at the Consuelo Business School, I made connections, and you might hear a lot of people say, well, there's only 1 or 2 degrees of separation. So one of my peers in the program is Floyd Green. I saw that he joined. Hey, Floyd. Floyd was the one who, after business school, had gone on to work at Peachtree Asset Management, where Sabrina was, and took me to lunch and said, hey, you should do this program. You should start thinking about it. And after I finished business school, I did portfolio management for high net worth individuals. And it was in that program that I found out about institutional investing. And that's how I started with Southern, and started there over 20 years ago, moved through the ranks with increased responsibility.
Perfect, thank you so much. And then Nathan.
Yes, I started my career in 1995, and actually in California with Nestle. And I worked there for about 4 years. And on a February like this, we had our Black History Month, and one of the, Andy Young came out to speak to the Black employees and told us about investment banking in Atlanta and the growth of Atlanta. And I had a chance to meet with him, and he said, you should come back to Atlanta. So that kind of led me on a path to go to Clark Atlanta. I got an MBA there, and ended up working for Maynard Jackson, the former mayor, in its research department. So I headed up the research, worked there for about 7 years. And after Maynard died, I decided to, I met Lynn Blake, who was former president of the CFA Society. And Lynn gave me a chance to purchase his company, and I bought Security Capital about 10 years ago. We do public finance, corporate finance, and corporate access, some research work through some third parties. Some of the challenges that I see is just like anybody else being an entrepreneur, is raising capital. That main challenge is showing that you have a rationale for your business. You can articulate your mission, and also showing that credibility. And you have that in any career. And so I've had a chance to work here in Atlanta, and the CFA Society has been a great place to meet and develop some great relationships. Thank you.
Perfect. Thank you all so much for being here today. I know one thing in common that you all have is there was no direct path to where you are today. There was a lot of different routes you all take. Just for everyone on the phone, you might not have expected right out of school, you know what you're going to do, but you all have very different paths, and I'm sure you had people along the way, obviously, to help you. But I think the next topic that we want to move on to is Atlanta's Black investment community. So in light of Black History Month, and given this is the first CFA Society of Atlanta Black History Month event, let's start off with the evolution of the Atlanta Black investment community. So you all have been part of this community for 20 plus years. Walk us through where it started, the journey, and then where we are today as Atlanta's Black investment community. So we can start with Dakia first.
Sure. So I sat for level 1. I won't date myself, but I'm about to. In 1997, back then it was called AIMER, and Floyd was obviously very persuasive. So I went straight in, was 2 for 1. Now maybe I started in 98 because I was married in 2000, passed level 1 and 2. I was on the move, and then had a June wedding in 2000. And that's where I slipped up. But came back in June of 01 and finished the program then. At that time, using a network and leveraging that network was very important. There was no LinkedIn or easy way to find your peers of color. And so I think what's really important is to make sure the younger talent sees people like us who've been in this business for more than 20 years so that they are motivated to continue. Anyone else? Nick, I think you're on mute.
Thank you, Dakia. Yeah, I'll just give you my historical perspective. Yeah, I arrived back in Atlanta in 1990. And was able to join up with, like I said, Greaves Capital Management. We were a large cap value manager. But if I was to characterize the Black investment community in Atlanta back in the day, so back in the 80s, there was a concentrated effort to bring emerging managers of all types into the investment management businesses, either consultants or investors. And so I can say that virtually all of my friends that were my contemporaries at that time, they either started with or early in their career worked with a firm or for an institution. And so the business back in the 80s and 90s seemed to have been more institutionally focused. I knew folks working in the pension funds at most of the companies that had pension funds in Atlanta, most of the institutional money management firms in Atlanta at that time. And so, yeah, there always were bank trust departments that focused on managing wealth for individuals or families, but the business was very much an institutionally driven business. Now you roll forward 20 plus years today and you have a totally different dynamic. People or individuals, youngsters, as I like to call them, who are coming into this business today are looking at an institutional investment environment that is more so focused on managing money for wealthy families or wealthy individuals, high net worth, if you will. Back when I started this business, high net worth was not even a term that was tossed around that much. And so I think there's been a very much a transition here in Atlanta, and I would dare say it is probably not different from any other places, whereas this business has gone from one that was more or less institutionally focused to one that is now focused on managing money for wealthy families and wealthy individuals.
And I would also just echo that sentiment. It seemed like in the 90s, you had a lot of institutions that may have had a mandate to have emerging firms as part of their portfolios. Yep. So I think that's what really got the that cycle going at Peachtree Asset Management. I mean, we had really large institutional clients that we managed money for. So I just think it was something that, you know, there was a mandate for at the time.
And I'll just add, I agree with Nick. You know, there's still a market there. I actually participate in that market across the country. But you know, we have a lot of great professionals here that, as people say, everything kind of starts in Atlanta. So I just think that at the end of the day, we will see more opportunities for folks. It's just that we got to get more people like yourself, Jennifer, to get involved. And we also have to do more things like this with the CFA Society to get a more diverse group of folks involved in the business. As you see us, you'll see more in the future.
Perfect. And that kind of leads me to our next topic with networking as well. I mean, it's an important part of the Black investment community. So can you guys kind of talk to me about your journey, like networking, being part of the society, as well as how we can improve the connectivity of the Black community in an industry where there's a lack of diversity there?
Sure. Yeah, I'll jump in. Like I said, I was exposed to the industry through the former owner of Security Capital, which I acquired in 2007. The forecasting event is a great networking event that you get not only a great education, but you also get a chance to see folks you hadn't seen in a while. You get plan sponsors, sales folks, analysts, portfolio managers all in a room, not only to network, but also to get educated. And I will say that that event, the forecasting event, creates a demarcation of some of the other events in town, just because of the education component that you get out of it. Mm-hmm. I think that if like I said earlier, if the society continues to show diversity with its programming, having diverse folks, we'll continue to see that. In the industry, there are biases. You just got to work kind of through that. But I think we're taking steps to move that forward. I'll let somebody else kind of jump in after that.
Yeah, as well as networking, you know, I think that having a mentor and mentoring is very important. As a result of some of my mentors, you know, I am more out there trying to, you know, provide some insights to folks who are taking an interest in this business. I know Dakia and Nathan, Sabrina have all had mentors who have been very instrumental in their career. And I know one of my most influential mentors was at Georgia Pacific. I worked for a gentleman named Greg Johnson. And I will tell you, I've worked with a lot of people in my long career, but Greg Johnson is probably one of the best investment professionals that I've run across in almost 30 years in this business. You know, Greg challenged our team to think outside of the box. Greg instilled within us a appreciation for risk management. I mean, you know, we all at one point in time or other in our career fancy ourselves as latter-day Warren Buffetts, but you know, when it's all said and done, we are first and foremost risk managers, and risk is the only thing that we can control. And so, you know, you get your arms around your risk management, returns will take care of themselves. And certainly for me, Greg gave me the opportunity and the appreciation of making investment decisions on large scale sums of money, and then to be responsible for my investment decisions thereafter. So I just cannot stress enough the importance of having really good mentors at some point in your career that really focus you on this industry of investment management.
And I just want to remind everybody, you know, we talk about finance and investments, but this business is really about relationships. Mm-hmm. Because, you know, a client or prospect will not seek you out if they don't feel comfortable with you managing their money. So there is a huge element of, you know, human interaction that, you know, sometimes I think we forget about.
Yep.
I'll just add that, you know, think about your networking efforts in the same way that you think about the way you work at your individual organizations. I worked in an environment where my boss, who just retired last year, gave us a lot of autonomy to sink or swim. Mm-hmm. That was great for me because it pushed me to learn on the way. And that's how I treat networking. I'd be on the AIMR website looking for CFA charter holders at Coke, finding out if there were any women. Hello, Belinda. And then I would do the same sort of search and look for women at Cox and find Carol Warner. And then I'd go to an event, saw Nick at Georgia Pacific in person. But I was very intentional about trying to figure out where the women and minorities are, because we could share best practices and learn from each other. So be very intentional, I'll say, about networking.
And even today, I guess, so how would you like promote finding mentors, I guess? Is it still like LinkedIn, or are there other advice you guys could give to people on the phone today of finding those mentors, that relationships that you all were able to have?
Yeah, I think it's critical that you network. Again, I mean, you got to reach out to folks. I mean, two critical folks that got me involved here as well. Sharon, she's probably on the call, and Wayne, who's I think at Northern Trust now. But those folks brought me into their homes. I think, Sabrina, we had dinner at Sharon's house one night, and just getting to know folks. I had my wife and my son, who was just one at the time. And it's just critical that you get to know people and you establish real relationships where you can earn that trust and respect from folks.
And I'll just say that mentors can sometimes be right under your nose and your peers. So I'm going to shout out Floyd again. So when he gave me that advice, he was someone who had done the Consuela MBA in 3 semesters. I already worked at FDIC, examining banks. He was the bank police. He went to a historically Black college, Tougaloo, which is in very rural Mississippi. And he was just making it happen. So anything he said I needed to do, I did. So think about your mentors as your peers as well, to keep yourself fresh and moving forward.
Perfect. And so with that insight, we should also talk about the Atlanta job market. I mean, most of y'all said you've spent most of your career here. Can you kind of walk us through how do you build a career here in Atlanta? I mean, most people in asset management think of New York and Chicago. How are you able to kind of maneuver in the Atlanta market? Nick, do you want to get started there?
Sure. You know, maneuvering in the Atlanta job market, especially in this industry, of course, you know, the CFA is foundational more or less to anything you want to do in investment management. I mean, if you have no background in this business like I had when I started, it gives you the foundation for everything else you want to do from there. Of course, as our business has evolved and the financial markets has evolved, you know, you might want to consider doing some work in alternatives. The Chartered Alternative Investment Analyst designation is another designation you might want to consider. You know, I took the CAIA designation test the very first year they offered it. So I was among one of the first charter holders or awardees to the charter holder. And it happened because I was
And he didn't share that strategy, by the way. So some of us who started the CAIA designation work later on, after it got much more difficult and time went away because now we have families. I certainly was not married when I was doing the hardest part of the CFA or with children. And now the opposite is true. So I go to lunch with Nick last year and he said, why'd you wait till now? Like, you should have done it 10 years. So in the future, that's an example of what just networking will do for you.
And I think, Nick, you told me about the CAIA.
That's right. I remember, Sabrina.
Yep.
So somebody didn't call me.
Nobody called you. Didn't get the memo.
And then I took level 1, passed it without a problem. And right after that, they announced, if you have a CFA designation, you are exempt from the level 1 exam. I said, oh, this is just bad mojo. This is bad mojo to start with. But it's a good program, especially those of us like myself. And sorry to cut you off and go back to you, Nick, who's focused on public equities. I didn't focus much on the private market, so it's been educational for me as well. But sorry, go ahead, Nick. Next time.
No worries.
Tell us early.
Timing is everything, right? It just so happened that at Georgia Pacific at that time, we were starting to do some real serious work in the alternative space. And at the time the designation became available, I took a look at it and I was like, wow, this dovetails exactly with what we're doing. And so it just made sense at that point in time. So to a new person coming to this industry, I would highly recommend that they take a look at that in order to enhance their career. For me personally, as an investment professional, I've also found technical tools and methods to greatly enhance my ability to make better investment decisions. And so I went ahead and I finished a CFTE program, and I'm a level 3 candidate for the CMT's designation. So the one thing I'll say about investment management is you must always continue to grow as a professional. You just cannot sit on your laurels with what you've learned historically. This business continuously changed, and you must continually refresh your skill set. And to that end, I'll say to any new person thinking about this industry, you must embrace technology. You've got to get comfortable with and learn a programming language like Python or R, because the things that we were doing when we first got into this industry as investment professionals can be done with a few punches of a key. And so I suggest that you get comfortable with Python, comfortable with R, which will facilitate investment analysis or even development and testing of investment strategies for efficacy. You become more of a value to any organization, whether it's an investment management firm or a pension fund or a hedge fund or insurance fund, if you have a highly developed technical skill set to complement your investment background.
I'll just say for me, networking, if you're a plan sponsor, I'll just admit and speak for all of us and say that we're a little spoiled because we get to see firms like Truist and Security Capital come in and pitch their strategies and their services to us so that we have a better idea of what the marketplace looks like. That leads to natural networking as well. So a lot of times you might have a firm who's here from Russell in Seattle, but the person who's pitching is originally from Atlanta. I've made a lot of relationships like that. A lot of them at Voya, where you are, Jennifer, I've made that way as well. And talking about change over 20 years, salute to Christine Hertzellers as a female CEO of Voya, of a huge investment management firm. When I started at Southern in 2000, they were ING at the time, and they were one of our passive equity managers. And now look, and under her leadership, I've seen an appreciation for inclusion and diversity take off like a rocket. You can see her imprint there. So you're very fortunate to be there under her leadership.
Yes, yeah, I mean, we have a diversity inclusion program and ERGs. Just while we're here, I mean, it's a great opportunity. I mean, I'm here because of my manager and his leadership under our ERGs, but I think that also leads me to career paths as well. I mean, you've kind of touched on how you work enter energy or with each other through different industries, but you all work in different spaces. So I think it'd be a good time for everyone on the phone here today to kind of hear about what other career paths are out there that aren't the Wall Street, the glamorous on Wall Street trading type jobs. I mean, I think that's a good pathway.
Sure. So I'll start. I mean, I think Sabrina's path was similar to what you see a lot, which is starting at a Smith Barney, starting at an investment bank, rigorous type of introduction to the business. I started on the plan sponsor side, remained there, as you can see, for quite a while. But there are so many avenues that you can take in this business. There's the trading and brokerage side, which is where Nathan specializes. There's consulting work where Nick has spent a lot of time. There's not just portfolio construction and stock selection at Avoya, but also what we call portfolio specialists who can speak on behalf of a strategy and meet with large clients, both locally and regionally around them, right? There are CFAs at Southern Company who do not do investment work at all. And that is because, as no surprise to any of us here, the level 2 exam is very rigorous in the way of financial statement analysis. So I have colleagues at the company who were in CFO spots or were in heavy finance roles, one of which is Pedro Cherry, an African-American officer now at GAS, but spent a lot of time at Georgia Power as an officer. And I would go to a local CFA event and see him there, because you don't necessarily just have to do investing with a charter. There's compliance work, there's legal work, there's so many avenues to take.
Yep, I have friends working in treasury with CFAs. And then there's all the alternative paths, whether it's private equity or venture or working with a hedge fund or a commodity futures trading vehicle. So there are so many attractive career paths outside of the Wall Street, quote unquote, oriented type of careers that we think about. And I think one of the things that the society could do a little bit better is, helping people who are even beginning to think about the CFA as a career trajectory, to know the diversity of things that there are out there to do with your CFA once you've gotten it.
And I'll just say, as evidence of that, even though I had that very dedicated relationship with Floyd in that lunch discussion, the society, I believe, continues to offer a review course for the CFA exam and the candidates here in Atlanta. Is that correct?
Yep.
To your knowledge, Jennifer? So when I sat for level 1 in 1998, we met at a hotel in Dunwoody on Thursday nights. There's a lot of traffic going out there. And there were only 2 of us who were African-American in the class. The other person worked with Floyd and Sabrina and Lamont. That was Zuera. Do you remember her, Sabrina?
Absolutely, yeah.
Yeah, so Zuera and I were the only 2 in the class. Really, that firm had all the good diversity.
Had everybody, yeah.
Yeah. But once you start taking a class like that, you get to know your peers, and you're studying with them and getting to know them. And that's when I was finding out about, folks who were with Mercer or Hewitt or Aon or other institutional investing shops, if you will. So something as similar as a class offered by the society is a good way to find more about what the other opportunities are.
Mm-hmm.
Yeah, I would agree with that. It's a little bit difficult now that we're in this pandemic situation. So hopefully we can get over this hump. But networking, there's just no value you can put on that once we get back to in person. In fact, I have an example. Someone that I worked for, Degas Wright, I think he may be on the line as well, reached out to me earlier this week with someone who's interested in getting her CFA designation. She works for a company that's not, a financial firm. and he connected us virtually, and we're planning to get together. I actually invited her to join this call, and we're planning to talk via Zoom, hopefully sometime next week. So you'll have to get a little bit more creative in this environment.
Deacons did the same for Hey Joy. That's Joy.
There you go.
Deacons did the same thing with me.
So
and somebody did that for us, right?
That's what you have to do. So
Deacons wasn't shy. He called us both and make sure we knew who Joy was.
Yep.
So and made sure we connected with information.
So that's what you do. That's a perfect example that just happened.
Pay it forward
this week. Yep.
I think also, I guess when you don't know someone as well in the industry, do you recommend professors, or what other kind of connections can you make to be able to network as well?
Well, I remember when I was in the CFA program, I think his name was John Yeoman, was a professor at the Georgia State MBA program. And he encouraged a lot of his graduating MBA students to sit for level 1 right after their commencement. So they would finish in May and then sit for level 1 in the first, Saturday of June. And they had a really high success rate with that. But I bring that up because that was an idea that a college professor used to introduce more candidates to the CFA program. If something like that happened, at the Clark Atlanta University MBA program or others, that would be a great opportunity for the CFA Society to say and reach out to an HBCU like Clark Atlanta and say, let us tell you more about the CFA program, and let's speak to some of your students who are graduating and thinking about careers in finance. So that was a successful program for Mr. Yeoman, I know.
I think that's a good point of view, because I remember when I was graduating college, I didn't have a family friend or knew anyone in the industry. But I think if I didn't get the opportunity at Voya, an MBA program or something would actually be, I think, the next step as well, to be able to make those industry connections.
Sure.
And let's talk about diversity and inclusion programs, because so far we've talked about personal things that you can do to kind of help develop your career. But what's even more or equally as important is diversity inclusion programs at corporations nowadays. So in early 2020, we saw waves of firms either rolling out D&I or improving their D&I programs, or trying to focus on diversity at their own companies, and just to raise that awareness and drive more diversity in different corporations. So as hiring managers and senior leaders here at your organizations, can you kind of give us some insight on D&I initiatives that your firms are either doing, or what you think other firms should be doing to help drive diversity in asset management?
Yeah, I'll jump in. And you made this point earlier, Jennifer, that Voya has had a D&I department for quite some time. And I would say that's the same situation at SunTrust. However, Truist now, as a purpose-driven organization, I feel like we're having to take bolder actions as it relates to our involvement in the community. I mean, our whole mission is, creating better lives for our teammates, our employees, our clients, and the communities that we serve. And the board is actually holding us accountable for these actions. I would say coming out of the 2020 social inequality issues that we saw last year, the company is being really thoughtful about just having uncomfortable conversations, in meetings. And this is really coming from the top down. And what they've done is made diversity and inclusion a strategic priority for the firm, as well as within the wealth practice. And just some of the things that we're doing, I mean, the things that I've been seeing just in the last year or so have been really tangible. One thing that we're doing is leadership development programs. I recall the CEO sent out 24,000 copies, I believe it was, of the book Just Mercy by Brian Stevenson, and using some of the tools in that book as part of leadership training for managers. We're providing development programs for young, diverse talent, We're expanding diversity initiatives in our recruitment efforts. In fact, last week I was involved in recruiting wealth interns as well as people for our full-time program. And I'm looking at students from University of Georgia to Howard, Morehouse. So that's refreshing to see. And then lastly, and I shouldn't say lastly, because there are a lot of initiatives going on, but I'm personally involved in one working group where we're trying to expand our investment solutions to clients. And so we're expanding the pipeline of women and minority owned mutual funds that we'd like to bring on to have available to our clients. And if you think about it, women and minority owned firms represent, just a little over 1% of all of the assets that are being managed. There's such an unconscious bias that people don't tend to want to invest in them. At least larger organizations don't tend to want to invest. So we're trying to change that and add more of those firms on our platform.
That's great. I would share that my firm, like many firms, are actively involved in D&I. Everything from HR, working very closely with senior leadership, talent acquisition programs to reach out to find diverse candidates, reaching out to HBCUs, the Latin American Association, and what have you. But, when I take a step back and think about our industry in particular, African-American professionals represent only about 6% of the professionals in investment management. And that's as of around 2019 or 2020. Going back to when I first got into this industry, the numbers are probably not much different now than they were then. So the growth would not have been what I would have expected it to have been over the past 25 plus years. So when we think about what can investment management as an industry do to grow the ranks of diversity, I kind of look at analogies in IT and engineering. IT and engineering as career paths have been very intentional about bringing diversity among their ranks. And I think that investment management as an industry needs to model themselves after the intentionality of bringing diversity in among the ranks. That's identifying candidates at an early point in their college careers, some sort of mentoring process to bring them along, keep the interest going, get them into the CFA program, the CAI program, or whatever program that fits the career trajectory, and assist in getting more diverse talent into the investment management arena.
Yeah, I would agree. As a minority-owned firm, I would recommend executives kind of think creatively about how they set up their programs, and many of you folks on this call have done so because I've benefited off of it, not only with my firm, but with Jackson. But and think about how those programs create value in the marketplace. There are a number of opportunities where you get a chance to prove yourself, to build that trust, and you grow a firm. You never know how large that firm will become. So they think about how those programs impact those firms. I think it's very valuable. And like Sabrina mentioned, expanding the network of people that they're looking at, not the traditional pipeline schools, but maybe some other schools that you might want to look at in terms of recruitment. And in terms of employees, you can look inside of some of the minority firms themselves to find great candidates that have gone off from working for a minority-owned firm to a larger firm and had stellar careers. So I would say, open up the network. Events like this, showcasing, highlighting the talent that we have, especially in this marketplace, and continue to do so.
And I'm actually obviously a utility company, not necessarily an investment firm, but I certainly have learned how through forming relationships, I can be influential in promoting more diverse business partnerships in the work that I do. So, you know, even with portfolio management on a plan sponsor side, a lot of times we are not telling our asset managers who to trade with, like you might see with some public funds. We ask our managers to consider all candidates, but at the end of the day, they are responsible for their net alpha. And so their brokerage relationships are really, or we view them as part of their opportunity to increase that net alpha. So we don't get involved. However, when we are having transition events where we are terminating a relationship and hiring a new manager, moving hundreds of $millions from one manager to another, or rebalancing the program after we've had a company contribution, those are really trades driven by us. And when those opportunities arise, and I'm working with a Russell transition team, then I have a friend there who's originally from Stone Mountain, and he's a friend personally, Graham Seagraves, and I can call Graham and you know, three-way in Nathan and say, guys, meet each other, tell each other what you do. Maybe you can work together on my next transition. I try to do that in advance of needing the work and give them the opportunity to meet each other and figure out how they can partner. And frankly, I'll just also credit Charlie Schaffer there at Voya as well, who taught me the transition business better than anybody else could in his days at Deutsche Bank, originally from Atlanta. He and I just connected very well. So most of us can probably attest to the fact that we have colleagues who are white male or white, you know, females in this business who are personal friends. I leverage them all to learn, to know better, to get more, you know, depth in best practices and figure out how I can be more influential in my role. So there's all sorts of ways that we can sort of carry the flag for each other and the whole investment community to make it better for everyone.
Great, thank you. And I actually see the questions coming in, and one actually relates just to what Nick was talking about. So first one says, so do you think doing data analytics boot camps or courses or even a degree in computer science may be an avenue to get into finance, especially investments? I think that kind of relates to how you're talking about diversity within the tech field.
I think it definitely helps, but the de facto education certification that you want to have on your resume to get into this industry is the CFA. So yes, data analytic camps will certainly enhance your career. Computer science degree, very, very good background, but you need to understand the fundamentals of investment management, the fundamentals of investing. And so you must sit for the CFA if you're going to be in this industry.
Next question is, how have you been able to leverage your membership in the CFA Society Atlanta to aid your professional growth? I mean, like almost all of you have answered that question today, but if anyone else has anything to add there.
Well, I think the networking, I mean, I have been able to do my whole career, surprisingly, in Atlanta across a number of different disciplines in the institutional environment. And I will say that without exception, it is through the networks with people who I have known in the society and tangent to the society who have helped me move on to the next assignment. And so the power of the network in the CFA Society is second to none. And I think that's one of the best ways to enhance your career and keep it moving.
I think I just spoke to a young man who was recently wanting to learn more about this business, and he had already done the CFA program, but he had completed all 3 exams, but hadn't finished his membership. And I just did a double take. And I said, listen, you know, you really want to put that on your resume, and it needs to be visible, because not because you're trying to brag on yourself, but because the CFA typically gives you credibility in this business, and it says it's a testament to how serious you are about wanting to do this work. There are a lot of folks who say they want to do it, and then there's the folks who actually prove that they want to do it. And anybody who puts themselves through the misery of 3 CFA exams, to me, have met the requirements of you know, putting their mouth where their money is. So if not anything else, it says you're serious. It says you're committed. It says that you're in it for the long haul. It sends a message when you're functioning in this community. So I just gave that advice to that young man, like, you have got to make sure this is more visible. You're a nice kid and everything, but we get resumes every day. I'd love to see someone who's in their 20s, young, right out of college, who took the time to, and he's working on his work experience, but took the time to get a CFA charter. That's huge. Yeah.
Perfect. And then we have another question. So how does industry consolidation challenge Black-owned investment firms? That's a really good question.
That's a good question.
Let's punt to Nathan.
Yeah, I think the firms have tried to grow, and margins are getting thin. And so you've seen some very large consolidations, especially on the investment banking side. But at the end of the day, the business still gets to a regional type of business. There are smaller firms in corners of the country that outperform some of the larger firms because of, again, relationships and network. This business is really niche-y and really local. The CFA Society of Atlanta, the CFA Society of Chicago, and those folks get to know each other. And it goes back to making sure you know who's in the marketplace. And a lot of minority-owned firms are picking up on adding CFAs, building out their business, building out their compliance efforts. So we will see more consolidation, but I also think you'll see more firms also grow.
And then what other, oh, go ahead, Sabrina.
I'll add just a little bit. We also have been seeing, you know, some of the single product firms like Peachtree Asset Management that I was working for in the 90s. They're starting to expand their product line, and I'll use Decatur Capital as an example. You know, having a large cap growth business during a time where you're in a tech bubble, you know, that's essentially the reason why, you know, it's hard to survive. But when you start expanding into alternatives, as I think Nick mentioned earlier, and into other types of products, you kind of diversify your business a bit. So kudos to those firms who can expand their product lines in this type of environment.
Perfect. And then what other organizations in Atlanta bring African-American finance professionals together?
Well, I mean, I used to sit on the board of the local chapter of NASP. Our membership, or our current president, who's James Nelson, he's actually a CFA. That is a very important organization, that the GSA.
You might want to tell folks what NASP stands for.
The National Association of Securities Professionals. There's an Atlanta chapter, there's a national chapter. There's also the Georgia Securities Association, which is all of the traders. They have their organization. So those are two, I think, if you think about it, you're touching many different aspects of the business. So GSA, Georgia Securities Association, the traders, GFA, the CFA, the portfolio managers, NASP, you get a number of the marketers, you get some portfolio managers, and you also get to meet plan sponsors like Southern Company and City of Atlanta and other state pension plan folks that get involved. So,
and I'll just say, sorry, Nathan, were you done? I'm sorry. Mm-hmm. I'll just say that NASP, for me as a plan sponsor, is one of the best, has been one of the best places for me to find diverse talented firms. You know, they have a national conference every June, and I typically try to participate. I think my first conference may have been in 07, 06, when Atlanta was hosting the conference. And then after that, I followed it to Chicago, to Baltimore, various other cities. But if you're a plan sponsor like me and you're looking for diverse talent that your consultant may not be as, you know, as forward thinking as you are in terms of engaging women-owned firms and Black-owned investment management firms, then you have to get out there and do the due diligence yourself. And NASP has provided that opportunity for me to find the best and the brightest among, go where they are. I don't wait for them to fall in my lap. I try to go where they are. And the June conferences would be great times for me to, you know, identify who's new, who's mature, becoming more mature firms, who might be having trouble, who might be thinking about combining, et cetera. It's just a really good place to do a lot of due diligence. And proudly, I'll say that I was the 2020 recipient of the NASP Joyce Johnson Award, which,
congratulations.
Yeah.
Thank you, Nathan, which is bestowed upon many women leaders who are great people I look up to. Linda Jordan here in Atlanta. I think Linda's on. Hey, Linda.
Who's also CFA.
Yes, Melody Hobson at Ariel has received the award. So I was pretty shocked that I received the 2020 award, but I think it was a nod at, we see that you are trying to engage our community, right? And I try to be influential back at the office and say, if you want to find the firms that, like the Peachtree Asset Management, they're out of business now, but Decatur Capital is still in business. If you want to find them, you have to go where they are and do your due diligence there across asset classes, not just in public equities, but in fixed income and real estate and private markets as well. So, so NASP has been great.
And I have to also say that our last two presidents, Linda Jordan and James, are both CFAs. So there's connections there. The CFA Society would invite us to the events as well. So, you know, there's all networking that goes on among the organization. So, yeah, a lot of
we're all one big old family. And so NASP has an annual holiday event. If you have a busy year and you're out there and you want to, you know, network more in that space, you can always count on that holiday event. Not during a COVID, of course, environment, of course, but in a non-COVID environment, it's typically early December. And I'll just put Nathan on the spot. He can tell you what to do and when to plan for the next event. And hopefully we can have a December 2021 event. And that'll be a great opportunity to see all of us, actuaries, consultants, plan sponsors, investment advisors, everybody in one room.
Yeah.
Spreading holiday cheer.
Yes.
Perfect. And we have, it's actually an interesting question. So when looking back on your careers, are there anything that you all would do differently?
That's a good question.
That's a good question.
I'll jump in and say I would have studied and got the CFA while I was in graduate school and not wait until I had kids.
Oh.
It's hard to go back.
Yeah.
It's hard.
It's hard to go back. What would I have done differently? Well, I mean, I'll speak to the women out there as a professional woman in this business. You know, when I started at Southern in 2000, my main goal was to prove myself, right? And I was in a team of all white male. Many of them are friends today. They're still on my team. And as I said, my boss gave us a sink or swim sort of assignment. and I wanted to, you know, continue to hold my weight in the team. But I probably compromised my own sort of self-development, professional development. Maybe I had a big sigh of relief after the CFA was over and just kind of went back and retreated and never came out again until like 2006 or 7. But I had both my kids in, they're now 16 and 18. So born in 02 and 04, there was a good 6-year stretch where I was just working and you know, trying to balance family as well. But you gotta find, if you're a woman or if you're a person of color in this business, you really need to, those are years I wish I could get back, because those, you really have to make it a continuous part of your own journey, right? Professional development, networking, connecting with people. It can never, you know, we think there's a perfect time to get married, to have a kid, to buy a house. There's never a perfect time for anything. We just have to fit in as much of it as we can. But, you know, never suck, you know, take yourself out of the movement of what's going on around you in the community. You know, jump back in there, get in the ring, stay in the ring, and it'll pay dividends in the future.
I think for me, as my interests have evolved, my regrets would have been, or that I did not maintain as close a relationship with technology, i.e. Programming skills, as I should have been. You know, now I'm having to go back and learn stuff that I learned in undergraduate school from a programming perspective. So I wish, if I had one regret, it's that I let that aspect of my skill set get away from me, and getting it back is proven to be a little bit more challenging than I thought it would be.
I can't think of any regrets. I feel like the setbacks and challenges that I've had have helped me. So I can't really think of any regrets in my career.
No problem.
I'll just say I've never embraced technology, Nick. So I'm just doing far better than I am, because if it was up to me, I still have a BlackBerry, using it every day. I love that thing. So, you know, you're doing far better than a lot of us. But I think someone like you would do well on some of these quant teams that I oversee, who are looking for net alpha increases through modeling, and trying to find the right optimal mix of factors to come up with to choose the stocks. Yep. I hear there's a trustee of one of the state of Georgia funds, or maybe one of the local city funds, that say, they call it, you letting the computer pick the stocks. But that takes a lot of skill, and there's always room for that in this business.
Yep.
Yeah,
absolutely.
We have 2 more questions. First one's for university students applying for internships. Are there any specific areas they should target if a rotational program isn't offered?
Good question.
Well, I will say areas that are more technical in nature, there's always a high demand and lower supply of that kind of talent. So if you think you want to do finance, or if you want to do any type of investing, you know, and if you're in a position to spend a summer working without being paid, this would be a good opportunity to sort of offer yourself in the investment operations areas of learning this business. You know, they say millennials like to jump right to the leadership spots, but one of the best ways I can attest to learning this business is to learn it from the ground up. And when I was with that high net worth individual advisory firm, you know, I was working with systems that were reconciling trades and portfolios, maintaining performance return composites, doing time-weighted returns, making sure that our trading licenses weren't expiring, the Series 7, the 63, all that stuff is base case investing 101. It comes in handy when you are moving along the learning curve in this space because, let's say, you have some sort of compliance issue in your work and you call up the trustee bank, the custodian bank who's holding the assets if you're a plan sponsor, and they say, oh, the return is off because of X. They can sell you anything if you don't know or speak the language. And, you got to understand what they're talking about to be able to say, no, that doesn't sound right. Let's start over. That cannot have happened. It has to be something else that, led to the problem. That has helped me tremendously. Just being able to, when there's a problem, I also had the pleasure of doing a planned merger back in 2016. The Southern Company announced it would acquire AGL Resources, and they had their own pension plan at that time and 401k plan, and I had never done a merging project. But there is a lot of planning and work to turn a switch on and say they're now merged. You're trying to maintain transaction history, return history, everything, and have it properly accounted for. Man, that work I did in the late 90s came to front fast, so I could make sure that I was accountable to the executives that I have to report to, that we're going to do this thing well and it will be without problems. And that's really all they want to hear. That's all they want to hear.
And I would say think outside of the box too, just in terms of internship opportunities. One of the internships that I did during undergrad was I worked at the Georgia Lottery and I worked in the finance department. So basically we had to do credit analysis on small businesses like gas stations to ensure that they would be, a good candidate to have, the terminal set up in their stores. So, you don't think about that in terms of investments in finance, but we were actually investing in these businesses and wanted to make sure that they were, credit worthy to have these terminals. So it's just, sometimes you might have to think outside of the box, but I got good experience looking at financial statements and understanding, profitability of companies through that internship. So I would say, just also think outside of the box. Your first internship may not be with an investment firm or bank.
But to your point, Sabrina, you might take an internship that's not investment heavy at a firm, but that might afford you the opportunity to meet someone on the investment banking side or with the pension fund or with the real estate group. So again, like you said, thinking outside of the box and then being able to meet folks in the disciplines that you might be interested in is another way that someone who is about to do an internship should think about it.
Yeah, and I will also say don't shy away from smaller firms. A smaller firm, you may get a chance to see a lot more. When I interned at Jackson, it turned into a rotational full-time job, and I got a chance to see compliance, sales and trading, public finance, corporate finance. So don't overlook smaller firms, and there's a lot of good small firms here in Atlanta as well.
And how would you how would you suggest them finding the smaller firms? I guess they don't really see commercials and have that exposure to.
Like we're doing right now, networking, right? Like those that are on the calls are going to know 4 new individuals. And I know Takia gets tons of calls right now, and Nick as well, and Sabrina, but I'm open, to mentor folks and take calls from younger folks to give them guidance in the business. And we do have a couple of internships as well.
I mean, if they're on this call, hopefully they are interested in the CFA program if they're younger. And if they have access to the membership directory, I used that thing every way I could, just to, for lots of reasons, for networking, but also to find out who my peers were so I could compare notes with in case I needed to. But get on there and look up the firms that are represented by charter holders, see which firms have more CFA charter holders than others. You might find that there are some boutique firms that might have more CFA charter holders than, say, a Southern company. But you'll know that you'll probably learn a lot more faster with that smaller firm, to Nathan's point.
Okay, and that's pretty similar to our last question here. Is anyone doing an internship or offering an internship, or like what programs are available?
We've done it in the past. We typically, at Southern, we get some students through certain colleges who have relationships with the company who want to do finance, and we get some interns who've been, you know, quote, scrubbed already, and then we raise our hand if we have an opportunity for a temporary project for an intern to work on, where it wouldn't be much disruption to bring somebody out and then have them go back to school. But that's typically how we treat internships. But we are also being very intentional to make sure that, you know, we're a company who looks for engineers primarily. So we have strong relationships with Georgia Tech and some in Auburn and some of the other big engineering programs, and Tuskegee, who produces a lot of engineers. We actually have done a lot of work in HBCU space because of that reason. North Carolina A&T, we always want engineers as much as we can. But sometimes we're now being more intentional about, you know, when we get a few interns who've been scrubbed for finance and accounting within the company, that they are not just being pulled from Georgia or Auburn or Tech or, you know, some of the larger schools, but also Spelman, Clark Atlanta University, Morehouse, et cetera.
And as I mentioned, Truist does have an internship and a full-time analyst program. We already wrapped up recruiting for this cycle, but if you're interested, just be on the lookout this fall for opportunities for that program.
Synovus also has a internship program primarily for bankers, but they are definitely offering internships similar to Truist. You know, the cycle is over now, but there will definitely be opportunities for internships.
And like I mentioned, we do have an intern through the year that kind of prepares people for you know, associates programs during the summer. And it's typically referral based. You may know somebody and they say, hey, do you know XYZ? And, you know, we'll take on that person. But I do remember that a number of the companies in town have very strong internship programs. And I'll mention James again. I know he sent out something recently that Invesco has a number of internships available. So you just got to keep networking, meeting people. And it'll happen for you if you really want.
Perfect. Well, thank you all. That ends our Q&A. I'll pass it back to Aaron.
Thank you, Jennifer. That concludes our program this afternoon. I'd like to extend a special thanks to our distinguished panelists and moderator of today's event, as well as to our corporate sponsors, Voya Investment Management and T. Rowe Price. We appreciate all of our members and guests for connecting with us today, and please be on the lookout for an event survey and webinar replay to arrive in your inbox. Thank you.